Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 10th, 2025, and we're diving into the latest earnings report from Gamehaus, a leading technology-driven mobile game publisher. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Gamehaus has just released their unaudited financial results for the fourth quarter and full fiscal year ended June 30th, 2025. It's an interesting report, especially given the current market dynamics.
Revenue and profitability overview. Let's start with the top line. Gamehaus reported a total revenue of $30.7 million for the fourth quarter, which is a 2.9% decrease compared to the same period last year. John, what are the key factors behind this decline?
The decline in revenue is primarily due to a strategic reduction in user acquisition spending and adjustments in their marketing approach. This was a deliberate move by Gamehaus to respond to evolving platform dynamics and increased market competition. Despite these challenges, they managed to maintain profitability with a net income of $1.5 million for the quarter.
And how did they perform over the full fiscal year?
For the full fiscal year 2025, Gamehaus reported a total revenue of $118 million, which is an 18.7% decrease from the previous year. Net income also saw a decline, coming in at $3.8 million compared to $8.6 million in fiscal year 2024. The company is clearly in a transition phase, focusing on strategic investments for future growth.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Gamehaus reported a slight reduction in operating costs for the quarter. What does this tell us about their operational strategy?
Gamehaus has been focusing on cost management, with total operating costs and expenses slightly reduced to $29.3 million for the quarter. Notably, they have increased their R&D expenses by 37.3% to $1.4 million, which indicates a strategic investment in developing new game titles and enhancing existing ones. This is part of their broader strategy to diversify their content portfolio and capture new market segments.
And what about their future outlook?
Looking ahead, Gamehaus has authorized a $5 million share repurchase program, which is a positive signal to investors about their confidence in the company's future. They are also expanding into new game genres like RPG and puzzle, which could drive future growth. Their business outlook for the first quarter of fiscal year 2026 projects revenue between $27–30 million.
CEO strategic vision. Gamehaus's CEO, Feng Shi, has shared some insights into the company's strategic direction. Can you elaborate on his vision for the company?
Absolutely. Feng Shi emphasized that fiscal 2025 was a year of transition, focusing on balancing disciplined execution with strategic investments. Despite the challenging environment, Gamehaus remained profitable and improved monetization efficiency. Key initiatives include a direct-to-consumer rollout, expansion into RPG and puzzle categories, and deeper AI integration across operations. These efforts are aimed at unlocking meaningful growth and delivering long-term value for shareholders.
Key takeaways. In summary, Gamehaus is navigating a challenging market with strategic investments and cost management. While revenue and net income have declined, their focus on new game genres and AI integration shows promise for future growth. John, any final thoughts?
Gamehaus is clearly positioning itself for long-term success. The share repurchase program and strategic initiatives indicate confidence in their future prospects. Investors should keep an eye on their upcoming game releases and how these initiatives translate into financial performance.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Gamehaus's performance in the comments below.